Santosh Rao joins us, Head of Research and Partner with Manhattan Ventures. Santosh, good morning.
Morning.
Where is the Santa? Santa is supposed to come year-end. Santa rally is missing.
Yeah, well, we still have a week left, so I'm sure we'll get a little bit more. I think the whole thing is at a broader picture. We will have the benefit of doubt. We'll have the Trump rally. We still not sure if it was pulled forward. I don't think so. The market is still good. The fundamentals are still good. Yes, inflation is sticky. There's fear of the budget deficits. There's fear of tariffs and lower taxes. All this trifecta of events are still weighing on the long-term bonds. So the bond market, the yields are going up there. But overall, I think at least for 1 year, the earnings are expected to be up 15% next year, according to consensus estimates. So the story will be good at least for 1 year going into Trump period, Trump administration. So net, I think, okay, there is some back and forth going on. We had the surprise from the Fed chair, but overall, the tailwind is still there coming into 2025.
Okay, so that's the view coming in. As far as the rally is concerned, you're expecting perhaps the last week is going to be slightly better. Let's wait and watch for that. But what about the overall trend that we are witnessing in India with respect to the FII outflows? Do you think after the massive rally that we have seen in the US, it's still the preferred port of call, or do you think at some point of time money will start flowing back into India as well?
Yeah, I think India ultimately will get its money. We'll get the FII flow back into India. But in the near term, I think US is still better. The yields are much better here. So I think you will get, we want to see what Trump does. He's spoken a lot. He wants to do a lot of stuff. It's America first. So let's see whether inflation and the tariffs will have the negative impact that the economists think it will have. But I doubt that it will have that much effect, because there is a tremendous sense of optimism, the business optimism. M&A activity is going to pick up, IPO activity is going to pick up. So there's that sense of positivity that's going to drive the market up, at least until it stops doing that. So at least next 2-3 quarters, at least, I think the outlook is very good. In the next 1 week, I think you're going to see a lot of technical factors playing in. You'll have the tax loss selling coming out. Then you'll have back and forth window dressing that happens all the time. So you'll see a lot of trading going on, a lot of volatility in the last week. But net, I think it will be up. But going into next year, I think the wind will be in its back. So the market will do well. At least that's the expectation from my vantage point. Just given all the fundamental data out there, other than the sticky inflation, I think overall the companies are doing fine. So earnings are fine.
Yep, and we're into the last few trading days of the year gone by, and I think it's been a roller coaster ride, at least when it comes to the US equities. Given that you have the US Fed now signaling fewer rate cuts for the year than previously projected, how are you looking at the cooler than expected inflation reading projections, as well as what the Fed could potentially do for the year ahead?
Yes, I think inflation is proving to be sticky. And I think the Fed chair pretty much admitted that. So it's going to, the rate cuts expectation for next year is just 2 cuts now, as opposed to 4 before. So he doesn't want to get too dovish, or he doesn't want to get dovish at all. He wants to stay on the higher side, because things are sticky, but the glide path is still down, though very slow. So he will get his 2% down the road, but it's going to take much longer. So inflation is not that big a worry, but it's definitely not coming down as fast as he wants. So net, I think you're going to see a lot of back and forth between the bond and the stock market, the yields and the stock market. So you're going to see a lot of that. But overall, I think he's bullish on the market. He thinks the growth is still there, but if the inflation just keeps on going up, and in fact goes up rather than down, then he will maybe put in one more cut or one more raise rather, if things get out of hand. But at this point, it's going to either hold or 2 cuts. That's the expectation in the market.
All right, Santosh, really appreciate your time. Glad you could join us with your thoughts.
Thank you.
If you like this video, then like, share and subscribe to ET Now.